Welcome, everyone. We are counting you down to the close. It is Wednesday, October 15th. This is Taking Stock, and I'm Kristen Scholler, live down here on the floor of the NYSE. A lot of news to get to today. Let's start with stocks. They're looking to close higher after another seesaw session. Choppiness has returned to the market as trade rhetoric re-escalates between the U.S. and China. U.S. government shutdown now in its third week has added to the uncertainty. Key economic reports are on hold before the Federal Reserve's next interest rate decision due at the end of October. Well, bank earnings are a standout in today's session, many of them NYSE listed. Traders today setting shares of Bank of America and Morgan Stanley higher after they reported upbeat results. Today on Taking Stock, we're going to catch up with Peter Tuchman of TradeMoss, Cesar Gon of CI&T, and Andre Kusit of Miro, plus an interview with Simon Cook of Lions and the latest from Money 2020's Scarlett Sieber. We are live down here on the floor of the New York Stock Exchange as Planet is set to ring the closing bell. Its president and CFO is going to do the honors. It is taking images of the entire world, looking to democratize access. And let's take a look at a view from way up high as Planet gets ready to close the equity markets right here on the floor of the New York Stock Exchange, here for its Investor Day tomorrow. Fractional gains, we will take it down here on the floor of the New York Stock Exchange. Let's take a look at a tail of the tape. The S&P 500 with decent gains. Again, a bit of a choppy session. At one point in the middle of the session was lower, but did end the day higher, up by 0.4%. Next up is the Dow. It actually did end a little bit lower by just 16 points, or not even 0.1%. Then NYSE Composite higher by 0.3%. That's a good day in the green. And the Russell 2000 small caps, they outperformed, up 1% on the session, also with a solid gain in the green on today's session as we round out this Wednesday on Wall Street. All right, we got to speak to the man, the myth, and the legend, Peter Tuchman, senior floor trader at TradeMoss. Down here on the floor of the NYSE. Peter, always good to see you.
Always good to see you.
And look, the choppiness is back, so make sense of it for our viewers.
I'm loving the choppiness. The market had traded sort of flatlined off the top for a while, right? And we were waiting to see what was going to be the next thing that was going to cause some kind of volatility, right? Either to build a base to go higher, or that this level was sort of resistance and we were going to get lower. Obviously, it was the argument, sort of the two egos, President of China and the U.S., talking about rare earth minerals was the first thing to catalyze sort of the market to sell off on Friday. Then sort of Monday was a spectacular, actually, rebound back because there were a couple of options. We closed at the low on Friday, down 180 handles, and it went even lower after the close.
Yeah.
And usually when that happens historically, and I've been here for a long time, usually gap down and go lower. That did not happen because over the weekend the narrative was more about the Middle East, hostage release, and I think that they started to play nice in the playground a little bit. But now we're seeing the choppiness, one day up, one day down. I think it's a mixture of the earnings coming into the market. It's also we're hearing, back and forth. The narrative gets aggressive at points and then it becomes nice. That's the way they play those two guys.
So we know, Peter, in times of volatility that we can see escalated trading volume. Have you noticed any change in terms of volume these past four sessions?
So look, we're seeing, yes, we are. I mean, whether it's 250, 300 million shares, which is probably 20 to 30% of our day, absolutely. We're seeing a lot of flow come in during the day. For me, which is what I trade, is the closing bell. It's that last 2 hours of trading. What we're seeing is a lot of flipping back and forth from the buy side to the sell side. People are trying to get a handle on what to do here, right? So that volatility is back. Traders love that. From an investing point of view, I think we're seeing very shallow pullbacks. When the pullbacks come in, you're seeing a lot of people coming in to buy. There's a lot of catch-up being played by some of the bigger players.
Yeah.
They still need to buy stock. Yeah. Right? They're coming in, we're in the beginning of the fourth quarter. Many of these large funds and large institutions are still a little underinvested basically for the quarter and for the year. So that's what we're seeing.
Okay, so how does that set up from a seasonality play and with that institutional insight us for the rest of the year when it comes to stocks?
You know what? Look, there's still a lot of. It's hard to make a judgment on what we have to look forward to because there are a lot of things, still a lot of unknowns in the game, right? It's a puzzle, right? So you still have a government that's shut down. So we're not getting a lot of the information that we need to get to make our decisions. We don't know what the Fed's going to do in its October meeting, which is a couple of weeks away. That's going to influence whether we get cuts, further cuts in interest rates this time in October, or we're going to set the stage for what's going to happen guidance-wise for November and December. That's going to set the stage on what's going to happen for the next couple of months. Look, there's a lot of people who really believe there'll be a 7 in front of that S&P by year's end, and there'll be a 50,000 in front of the Dow. And then there are those who think that this market should sell off because there are a lot of unknowns. There's weakness in the economy that we're seeing, which is what's setting up the stage for more interest rate cuts. So there's always two sides to that picture.
Okay, finally, bank earnings. What do they tell us about how the rest of this earnings season might go, Peter?
You know what? I think it says that we're in good shape. I think we would have known right out of the gate that if what would have impacted bank earnings in a negative way would have been tariffs, and we're not seeing that. It would have been basically hitting all the banks across the board. The state of the consumer confidence, and the banks are going to tell us how much influence and how much impact there is by tariffs on the market, on the banks. We're not seeing that yet in a negative way. So I think that sort of sets the stage for a more positive bank earnings.
All right, we're going to talk more about those bank earnings. Peter Tuckman.
One day at a time.
Trader.
Giddy up.
At Trade Moss, giddy up indeed. Thank you, sir. Always
My
good
pleasure.
to see you.
See you later.
All right. Let's take a walk because we want to take a look at how shares of those big banks did perform in today's session. Bank of America and Morgan Stanley, both of the stocks, just a little precursor, gaining several percentage points in today's session. And it does come after decent results from other NYSE-listed banks earlier this week. The banks historically kick off the earnings season. We'll have more reports to come from the rest of the S&P 500. Many more companies to go. But you heard it from Peter Tuckman there. Positive bank results could set up the rest of this reporting season to play out quite well. So we are going to approach Bank of America. Again, many of these banks, NYSE listed, JP Morgan, Citigroup, Goldman Sachs, Wells Fargo, all out with bank earnings earlier this week as well. So let's start with Bank of America. Howie, our cameraman, is going to zoom in there. Howie, thank you so much. That stock up 4% on the session. Second biggest U.S. bank reporting strong third quarter results, beating expectations with earnings of $1.06 a share on revenue of $28 billion, up more than 10% from a year ago. Profit jumping 23% to $8.5 billion, driven by a surge in investment banking fees, up 43% in record net interest income. That's the money that banks earn on the money that they loan out. So CEO Brian Moynihan said in the earnings release, quote, strong loan and deposit growth coupled with effective balance sheet positioning resulted in record net interest income, end quote. All right, let's move on over to Morgan Stanley while we're at it. A very big bank, not quite as big as Bank of America, but still large. That bank reporting a massive third quarter, exceeding expectations by its widest margin in nearly 5 years. Earnings of $2.80 a piece on record revenue of $18.2 billion, up 18% from last year. Profit surging 45% to $4.6 billion, and a good day for shares of Morgan Stanley, up 4.7%. All right, everyone. Well, yesterday, Money 2020's Scarlett Sieber sat down with Lion CEO Simon Cook to discuss how creativity is driving their business this year and beyond. Let's take a listen.
Welcome back. I am Scarlett Sieber from Money 2020, and today we are thrilled to have a friend, a colleague in Simon Cook, who is the CEO of Lions, the global benchmark for creative excellence. We don't have much time, Simon, so let's get right to it.
Get into it.
First of all, I have been so honored to be a friend of yours for some time, and you've done incredible stuff. When you think about the evolution of Lions, and you've been with the brand for a long time, it's really evolved a lot under your leadership with things like creative gaming and social and the Creator Lions. What drives these changes? And really, how do you decide what trends that deserve that next level of recognition?
Well, great to be here. Thank you for having me. The first thing I should say is how much of a pleasure it is to be working with an end market that is ever evolving, rapid in the changes that you see. And because of that constant evolution, it puts the pressure on us to make sure that we're not just reflecting the market and the landscape, but actually anticipating what the market needs. And we're incredibly fortunate to be able to tap into a global resource of customers and community who hold us to account. They make sure that we are representing the global agenda on the global stage rather than something localized or targeted. So we're very fortunate to be working with an ecosystem that helps us fuel that innovation year on year.
I love that. And one of the things that you and I have talked a lot about offline is the impact and importance of creativity and how that actually really does move the bottom line. When you think about brands and balancing that purpose-driven work with performance-driven campaigns, how do you see that evolving over the coming years?
Well, I think it's safe to say that we've seen a hell of a lot of purpose represented across the campaigns, and we see no reason why that trend should suddenly come to an end. If anything, I think there is a very high expectation for consumers on brands to continue to step up to do good things in the world and for people. However, when we're addressing our juries in 26, we'll make it very clear that we are not there to reward purpose for the sake of purpose. But if there is a brand driving its business through creativity for impactful change that also happens to be doing good in the world, then more power to them.
Love this, love this. So, okay, we are in 2025. I almost hate to bring this up, but I can't not. AI. When we
Sure.
think about the combination of creativity and AI, how do you think about these two things and what is that going to be in terms of impact of the industry that you're seeing?
Well, look, I think the biggest question that I've had here in New York this week is when are you going to introduce the AI Lion? In other words, a dedicated award to shine a spotlight on work that features AI. The short answer is we're not gonna, because I think that moment has sailed, it's past. We are seeing AI woven into the fabric of our industry already as a horizontal, not a vertical. So I think the most important thing for us is to continue to signpost how and when it's being used, but more importantly, how AI is in service to the creative that is driving the impact we want to see.
Love it. Well, thank you so much, Simon Cook, CEO of Lions. Love the time. Always enjoy spending time with you. And I know next year is going to be an even bigger and better version of what you've been doing for so many years. So brilliant.
Let's hope so. Thanks for
All
having
right.
me.
Thank you.
Cheers.
Back over to you.
Welcome back, everyone, to Taking Stock. We are here at the FinTech studio on the floor of the New York Stock Exchange, and time now for a few FinTech, crypto, and AI headlines. While the crypto majors continue to slide on U.S.-China trade war fears, Bitcoin, Ethereum, and Solana all down about 1% to 3% today. Next up, BlackRock, NVIDIA, Microsoft, and xAI are teaming up to buy Align Data Centers in a massive $40 billion deal. That's big. And lastly, OpenAI has laid out an ambitious 5-year plan to fulfill over $1 trillion in AI spending commitments. AI is here, and yes, that means data centers are at work. All right, well, joining me now to talk more about AI is Cesar Gon. He's the CEO and president of CINT. Cesar, welcome here to the Stock Exchange. It's great to see you.
Thank you. Great to have you.
So this is a great lead-in because we want to talk about AI. Your company here hosting its Impact AI Summit at the NYSE today. What is your biggest takeaway from the event?
I think it was an amazing discussion with our clients and see how they are leveraging the benefits of AI, especially improving efficiency with hyperproductivity, improving customer experience with AI, and also improving decision making. So it was an amazing discussion with our clients.
You know, so much of the AI conversation does seem to be about how do we go from experimentation to concrete results. How is CINT assisting in that department?
Yeah, we create a platform we call CINT Flow that is an AI management system that is going to help our clients to handle the people factor, the technology factor, and the risks associated with AI. I think this is a very important factor on how our clients are really going from POCs, pilot projects, to really see the benefits at scale of artificial intelligence.
And what role has your Flow platform played in the transformation of your own company as well as with clients?
Flow is going to help companies first tackle the modernization of legacy systems and the fragmentation of the data. Without good architectures and data, you will not leverage AI. And then Flow is also helping our clients to really measure the benefits they are having around their investments with AI. So take care of your legacy, modernize your architectures, your data, and then see if people are really using the right way and speed up this process, this cycle of learning and improving. It's key for really having the right benefits from AI.
Yeah. All right. Cesar Gon, down here on the floor of the NYSE. He's CEO and President of CI&T. Thank you so much for joining.
Thank you for having me.
Yeah. All right, everyone. Well, coming up, the latest on startups, raises, and rounds, plus an interview with Andre Kusid of Miro. You want to stay with us? Welcome back to Taking Stock, down here on the floor of the New York Stock Exchange. We are at Cheddar's Set here after the market close, and we want to talk startups, raises, and rounds in today's session. First up, AI startup Lila Sciences, raising $115 million from NVIDIA's venture arm at a $1.1 billion valuation to build, quote, AI science factories, end quote, to automate discovery. It's all about AI. Plus, smart ring maker Aura closing a $900 million round led by Fidelity, doubling its valuation along the way to $11 billion as it expands into AI-powered health tech and blood testing. A cool, fancy new ceramic ring to match that round. And finally, Glue, co-founded by former White House AI czar David Sachs, raising $20 million to take on Slack with an agentic AI-powered collaboration platform. All right, we want to talk more AI down here on the floor of the stock exchange, and for that I'm joined by Andre Kusid. He is the CEO of Miro. Andre, welcome.
Thank you, nice being here.
It's great to have you here on the floor of the New York Stock Exchange today. You were recently at the NYSE Tech Summit NYC2. Give our viewers a sense as to what Miro is doing.
Yeah, Miro is helping companies to innovate, to create the next big thing. So we started the company in 2012 with a simple idea of bringing whiteboard into a browser. Since then, we evolved into a visual collaboration platform, and recently we announced Innovation Workspace. And just yesterday, we brought the Innovation Workspace to the next level. It's AI Innovation Workspace, where team intelligence and artificial intelligence meets.
How does this Innovation Workspace operate? What does it optimize?
Yeah, it optimizes for teams to go from the discovery to the solutioning and to delivery in one sitting. Because before, the work that teams were doing and the work where teams were tracking it was separated. And now you can go from the very beginning of the work to the very end of the work in one connected workspace.
Pretty impressive there. In terms of your approach and what differentiates Miro from others in the space, what would you say is the moat?
I mean, number one thing is we're always optimized for a team collaboration. And AI recently was introduced, and it was a sidebar. It was a single player solution. What we're doing differently, we're bringing AI into the team collaboration dynamics, where AI becoming a part of the team. And this allows not just to get the individual productivity gains, but accelerate the time to market and time to value for the whole team.
Are there specific, maybe reoccurring pain points that your software can solve in this collaborative setting?
Yeah, I mean, there are two things. One is time to market. Everyone cares about time to market.
Yeah.
Everyone needs to accelerate that, and the faster the teams move through every stage of the process, the better. That's what we help solve. And the second is the quality. The more teams discover new opportunities, explore the edges of the solutions, the better, because then you can stand out on the market. So those two things we're solving for our customers.
We're going to queue up a video here of Miro Flows. That's what it is.
Yeah.
And maybe you can speak to this a bit here. Walk us through what our viewers will see and how it changes the way that teams collaborate.
Yeah. We just introduced this new UI, which we call Miro Flows. And the idea of Miro Flows is that you connect every step of the process. Before you had a workshop and then you leave the room and someone have to summarize that workshop in next week, and then next week someone will come and plan a project, and then a few weeks later you will have designer to do a prototypes. Now you can do this flow in one sitting, so the whole team can see the outcome of the initial idea in the first workshop. And these flows are quite powerful because it also introduces this new way to interact with AI. Before we had kind of conversational UI interfaces, and now we're introducing the canvas-based interfaces for AI.
Interesting. So there have been talks, since we're here down on the floor of the stock exchange, that the market does look frothy at these levels, that AI is in a bubble, that there's a lot of hype. Do you disagree?
I think there are different levels of application of AI. In the areas where you need to go and diverge and create more ideas, AI is super helpful because it's probabilistic, it can help explore the edges of the solution. There are areas in the business where you need high predictability, and that's where AI may be not ready yet for the prime time, but in general I think it's progressing super fast, and we'll see more and more business outcomes coming with AI solutions being implemented. So I see a lot of great implementations across the business.
I do want to hone in on the enterprise and what you think are the strengths that we can really lean into when it comes to AI that will get us the furthest, the fastest.
I think in general enterprises have to kind of bet on it, and the earlier you bet on it, the faster you can kind of transform, because the biggest challenge is actually how you bring your teams on the journey, how you bring your people on the journey. And the earlier you start to kind of implement AI and start give it, socialize it with the teams, the earlier you will get results out of it.
Andre, thanks so much for joining. Finally, any takeaways from NYSE Tech Summit?
Oh, it's been great. Thank you for having me here. Thank you.
Yeah, it's been a lot
Thank
of
you.
fun. The NYSE Tech Summit, of course, yesterday at NYC here on Wall Street. Andre Kusit, he's the CEO of Miro. Thanks again.
Thank you very much.
Congratulations.
Appreciate it.
All right, everyone. Well, we are going to take a quick break, but on the other side, Money 2020, Scarlett Sieber is back with the 411 on 401ks. You don't want to miss it.
I'm Scarlett Sieber from Money 2020, and welcome back to Hindsight 2020, where we look back at the history's most monumentous moments. Honestly, what we're really here to do is make you the most interesting and informed person at your cocktail party, but let's just call that Hindsight 2020. Since we're in October, which is clearly the best month of the year, it happens to be my birthday month, it seems fitting to journey back to actually a fateful year of 1907. Why 1907, you ask? It's a bit on the nose, but the answer is because of the panic of 1907. This is one I had to spend a lot of time researching because it's not a story that everyone on the street actually knows about. It's October 1907. America looks like it's on a tear. The railroads are booming, the factories are cranking, robber barons are counting yachts like baseball cards. But under the surface, it's Jenga. No Federal Reserve, no deposit insurance, no seatbelts. Why? They didn't exist yet. Think about how far we've come in a century. It's kind of crazy. This is just a bit like a soap opera. Now stay with me here. I got a lot of PTSD from that as a kid, but there are some really fascinating characters in this whole thing. Stay locked in. Let's move fast. Our first genius, Otto Heinze. He and his brothers tried to corner the copper market, buying up United Copper stock like toilet paper during the pandemic. It collapses instantly. Their bank buckles. Which brings us to Charles Barney. No, not Barkley. Barney, although Mr. Barney did dunk on some people in the business world. He was the head of Knickerbocker Trust. Suddenly, depositors all lined up around the block demanding cash. Those days of windmill dunks were over for Mr. Barney. Within days, Knickerbocker is shuttered, and trust in the entire system evaporates. Banks everywhere look shaky. Stocks take nearly 50% from the peak. Credit freezes, factories shut, unemployment spikes. This isn't just a blip. This is an economy on fire. And then enter JP Morgan. Not the bank, by the way, the man. That's right, the legend himself, a 70-year-old mogul with a walrus mustache, which, by the way, was very impressive. And the man had more clout than the president. Let's talk about that power. While Teddy Roosevelt is off busting Standard Oil, Morgan is literally locking bakers in his library, pouring them whiskey and saying, "You are not leaving in this room until you all pony up." Remind you of Hank Paulson locking every bank in a room the weekend of the 2008 crisis? Learned it from somewhere. History may not always rhyme, but it's full Buster Rhymes up on this one. I had to do it. I'm sorry, I had to do it. But back to our boy Teddy R. He strong-armed Wall Street into throwing $25 million to rescue trust companies, another $35 million to backstop the city of New York, and personally audit balance sheets overnight. Like I said, it's similar to what Andrew Ross Sorkin's Too Big to Fail records and recounts, except for it's one cranky guy with cigars instead of the entire Federal Reserve. And it works. Well, sort of, kind of, mostly. The panic eases, but the cost is brutal. A recession, bankruptcies across the US, and the shockwaves felt in Europe, global trade slowed. This was a wake-up call for financial stability and risk across the globe. The result? 6 years later, 1913, the Federal Reserve was born. So what did 1907 teach us? One bad bet can torch the whole system, but one man with enough power and mustache wax can stop the bleeding. The world learned we needed real guardrails, and that's why the Fed exists today. They say don't panic. I'm guessing that phrase became popular back in 1908. Back over to you.
All right, everyone, that just about does it down here live on the floor of the New York Stock Exchange, taking stock. And what a day to take stock, because we did see fractional gains for the S&P. A fractional loss on the Dow, though. The choppiness has returned amid trade tensions. Earnings, though, are a standout, and big banks listed here on the NYSE did get a boost. Tune into NYSE Live tomorrow morning, 9 a.m. Eastern, with Ashley Mastronardi. That, of course, is going to do it for today's show. We'll see you back here at 4 p.m. Eastern. Have a great night.